Welcome back to Singapore Property Talk Law. And this is our deep dive segment where we really get into the details of topics you share with us. Today, we're unpacking a pretty significant event, one that definitely sparked a lot of conversation, that proposed $2.2 billion deal between Allianz, the German insurer, and Singapore's income insurance, the one that, well, didn't end up happening. Before we really get started, if you find this deep dive valuable, please do hit that like button and subscribe to the channel. That way, you won't miss out on our latest deep dives. Okay, so this whole story really kicks off back in July 2024. That's when Allianz put a formal offer on the table.
Right. $2.2 billion for a majority stake in income insurance.
Yeah, and it became this huge talking point, didn't it? It even popped up again during the general election campaign just recently in 2025.
Absolutely. And what's really fascinating, I think, is how this wasn't just a straightforward business deal. It really pulled together so many different threads.
Like what?
Well, you had the financial side, obviously. But then you had Income's history, its roots as a social enterprise from the labor movement.
Right, the NTUC connection.
Exactly. And then government oversight, MAS, MCCY, and these big questions about public interest. It got complex fast. So our plan today is to walk through the timeline, figure out the key moments, and understand why it didn't go through.
Okay, sounds good. Let's unpack this timeline then. Where did it all begin?
Well, our sources point to July 17th, 2024. That was the date of the formal offer from Allianz.
The specifics were around $1.5 billion, which converted to $2.2 billion back then.
Yep, for 51% of income shares. The price offered was $40.58 per share.
And didn't the sources also mention something about projected cash returns?
They did. Allianz apparently projected that Income could return about $1.85 billion in cash to its shareholders, within the first 3 years if the deal went through.
Which, on the face of it, sounds pretty significant. And it's worth remembering Income structure here. It only recently, in 2022, corporatized.
Yes. It went from being a cooperative to a public company. Correct. Income Insurance Limited. And at that point, NTUC Enterprise held the majority, about 72.8%, with others holding the rest. That shift from the co-op model is definitely a key piece of the puzzle here.
That makes sense. So almost immediately after the offer, late July, early August 2024, that's when the tension really started bubbling up, right?
This is exactly. Questions started being asked publicly. Could selling a majority stake to a big foreign commercial player like Allianz actually clash with NTUC's original mission?
The whole affordable insurance for the masses thing.
Precisely. And you saw responses coming out. NTUC Enterprise on July 30th basically said, look, the social purpose remains, but the old social enterprise model alone isn't enough for growth anymore. The market's too competitive.
Okay.
Then, August 5th, you had a joint statement from NTUC leadership. They acknowledged Income needed capital, serious capital, for stability and growth.
And that NTUC Enterprise, as the main shareholder, couldn't just bankroll it all themselves.
That was the message. And this is where it got really interesting, as you said. The conversation just pivoted. It wasn't just about the money anymore. It was fundamentally about the social mission, affordability, that core purpose.
And inevitably, that debate spilled over into Parliament. August 6th, 2024.
Yes, MPs raised concerns. They were asking, how do we guarantee affordability? How do we ensure accessibility for ordinary Singaporeans if Allianz takes over?
So how did the regulators respond? MAS, the Monetary Authority of Singapore.
Well, the second Minister for Finance spoke on their behalf. MAS made it clear they expected Income to honor all existing policies, full stop.
No changes for current policyholders.
That was the expectation. And they'd hold both Income and Allianz to any commitments made. Plus, MAS reiterated the standard rules. Insurers need enough capital. They need to treat customers fairly, especially those with participating policies.
Right, the ones where you might get a share of the profits.
Exactly. So MAS was focused on the regulatory and financial stability side.
Okay. But after that debate, there was another layer of scrutiny involving MCCY, Ministry of Culture, Community, and Youth.
Yes, because of Income's history as a cooperative, MCCY had oversight too. They continued their own due diligence on the deal.
And this is where it gets a bit more complex behind the scenes.
It seems so. The sources mentioned that MAS provided MCCY with more detailed info on Income. And crucially, this included something called Income's Capital Optimization Plan.
Capital optimization. Basically, a plan for managing or maybe distributing their financial reserves.
That's the general idea. And MAS felt this plan was relevant for MCCY's assessment, particularly from a public interest angle. The key thing is, the sources suggest MCCY hadn't seen this specific plan before that point.
Huh. Interesting.
Yeah, it really highlights the different perspectives, doesn't it?
Hmm?
MAS looking at financial soundness, regulatory rules, MCCY looking at public interest, the social mission aspects stemming from the co-op routes, and how the information flow between them was pretty critical.
So all this review, all this back and forth, it led to October 14th, 2024, the day the deal was officially called off in Parliament.
That's the date. The MCCY minister announced the government's assessment. The deal, in that specific form, was not in the public interest.
Not in the public interest. Pretty strong words.
They were very specific, though. The concern was cited as being about the terms and structure of this specific transaction, particularly how it related to that recent corporatization exercise.
So it wasn't necessarily closing the door completely.
No, the statement explicitly said the government was still open to other ideas, other arrangements for Income's future, as long as those public interest concerns were addressed. And PM Lawrence Wong backed this up on Facebook shortly after.
Okay. And then, just 2 days later, October 16th, there was a concrete regulatory change, right?
Yes, Parliament passed an amendment to the Insurance Act, a significant one.
What did it do?
It basically mandates that MAS must now consider MCCY's views when they're evaluating deals involving insurers that, like Income, started out as cooperatives. It adds that public interest layer formally into the MAS approval process for such entities.
Got it. So a direct consequence to this whole episode.
Seems that way. And something else emerged that same day, October 16th. Quite telling, actually.
Oh? What was that?
The NTUC Deputy Secretary General revealed that the NTUC Central Committee, the top leadership body, apparently hadn't been aware of the details of Income's capital extraction plan until October 14th.
The same day the deal was publicly called off.
The very same day. Which, suggests maybe some internal communication gaps about a really key financial aspect of the proposed deal.
Wow, okay. So the government says no, the law changes.
Mm-hmm.
Did things just stop there?
Well, there were some brief mentions later. A bourse filing, that's a stock exchange announcement, hinted at some continued discussions in November. Very brief.
But it didn't lead anywhere.
Ultimately, no. Our sources confirmed that on December 16th, 2024, Allianz officially pulled the plug. They formally withdrew their offer.
Citing what reasons?
Respect for the Singapore government's decision and also their own financial discipline. Standard corporate language, really. Income and NTUC Enterprise acknowledged it, said they'd keep looking at other options for Income.
Right. And then silence for a few months until April 2025. And suddenly, this whole saga is back in the headlines during the general election campaign.
Yes, it certainly resurfaced. The sources map out a bit of back and forth.
Can you walk us through that? Keeping it neutral, of course.
Of course. So April 26th, the Workers' Party chief, Pritam Singh, brought it up. He questioned why no PAP Labour MPs had spoken during that initial debate back in August 2024.
Okay.
Then, April 27th, the Labour chief, Eng Shimeng, responded at a rally. He maintained the deal was proposed in good faith, complied with the laws at the time, but also acknowledged that, yes, lessons were learned.
And others weighed in.
Yes. Later that same day, Senior Minister Lee Hsien Loong commented, said he didn't blame Eng Shimeng or the labor movement for the outcome. He also noted the WP had abstained on the vote for that Insurance Act amendment bill in October.
Which prompted another response.
It did. April 28th, Pritam Singh replied, suggesting SM Lee hadn't really addressed his original point about the PAP Labour MP silence in the August debate. Also on the 28th, another WP candidate, Harpreet Singh, asked DPM Gan Kim Young about MAS's handling and accountability.
And DPM Gan responded.
Yes, on April 29th. He clarified MAS's role back in July. He explained that MAS's initial focus was on the ownership transfer itself, ensuring regulatory requirements, capital liquidity were met.
So not the capital extraction plan specifically.
According to DPM Gan, MAS's initial review wasn't focused on the implications of the capital extraction plan from a public interest viewpoint, as that fell more under MCCY's remit. MAS ensured the financial stability aspects were covered, with mechanisms for potential capital withdrawal if needed.
Okay, quite a journey. So if we try to sum this all up, what are we looking at?
Well, we started with a major international insurer wanting to buy into a very significant local player, one with deep roots in the community and the labor movement.
Which immediately raised flags about his social mission.
Exactly. That led to parliamentary questions, intense scrutiny from different government bodies, MAS, MCCY. Ultimately, the government stepped in, deemed that specific structure not in the public interest.
The deal gets withdrawn. A new law is passed. And then it becomes political fodder in an election campaign.
That's the sequence. And what it really throws into sharp relief, I think, is this fundamental tension for an entity like income insurance.
The tension between needing capital, needing to grow and compete.
And holding on to that foundational commitment to providing affordable insurance, serving the mass market. It's a classic dilemma, really, but heightened by income's unique history.
So the takeaway for someone listening is understanding that complexity, the push and pull between business needs, regulations, social goals, public interest.
I think so. It's a case study in how those forces interact, especially when you have an organization evolving from cooperative roots. And it leads to a really important question.
Which is?
Well, thinking about that core tension we just discussed, growth versus mission, capital versus affordability, how should that balance be struck for organizations like Income going forward? Especially now with this amended Insurance Act adding another layer, requiring that specific consideration of MCCY's views. What's the right path ahead? That's something worth pondering, isn't it?
It definitely is. A lot to think about there. Thank you for walking us through that complex timeline.
My pleasure.
And thank you for joining us on this deep dive into the Income-Allianz story. We hope unpacking it step by step has been useful. Do keep thinking about those questions raved, and we'll catch you on the next exploration here on Singapore Property Talk Law's Deep Dive segment.